Hello, welcome to the European Open Briefing for Wednesday, December the 20th. I'm Rafi Barajan, currency analyst at xm.com, and we're going to be taking a look at the latest developments in the currency markets today. So we're not seeing any major moves despite that Senate vote yesterday where they finally passed the tax bill, paving the way for President Trump's first major legislative victory since coming into office. The euro is firmer despite the broadly stronger dollar. We are seeing a spike in German bond yields, which is supporting the single currency. The pound is steady against the dollar as investors await for further details about the trade, the EU-UK post-Brexit trade negotiations. And the loonie isn't doing too well this morning. It hit a 5-month low on the back of the stronger dollar, as well as some ongoing concerns about the NAFTA renegotiation. But let's first start with the greenback. We can see dollar yen has climbed back above the 113 level. So the next target is the December top of 113.74. We can see that though the dollar index hasn't been doing as well. It did start the week, it ended last week on a stronger note, but has since been trending downwards. We can see it's currently trading around 93.50. Yesterday we had a vote both in the House of Representatives and the Senate, where both houses passed the final version of the tax bill. However, there was an amendment needed for the Senate's version of the tax bill due to some provisions in the bill which did not comply with Senate rules. This means that the House of Representatives, which voted first, will now need to vote again on the amended bill, although they are expected to pass it easily given the Republicans' much bigger majority in the House. So it's quite likely that the legislation will reach President Trump's office by the end of the week, and he will be able to sign it before the Christmas holidays. But there's another concern now for the markets. The Congress needs to approve a new funding bill. This has to be done by December 22nd, otherwise we could see a government shutdown. Although it's widely expected that they will also manage to reach some sort of an agreement on that front as well. In the meantime, all of those concerns are somewhat weighing on the US dollar. We should have really seen a stronger rebound or stronger gains in the greenback because the yields, the 10-year Treasury yields, did manage to rise significantly after the Senate vote yesterday. We can see it hit a 7-week high of 2.472% near the October high. But we can see that at the same time we are seeing a spike in German bond yields, which are also pushing higher other Eurozone government bond yields. So that explains why the greenback hasn't been able to rise against the euro. And versus the yen, dollars gains have been limited due to some cautiousness ahead of the Bank of Japan policy meeting tomorrow. There has been some speculation recently that the Bank of Japan may be getting ready to exit its stimulus program much earlier than expected, although that's unlikely to come at tomorrow's announcement. Nevertheless, there have been some concerns about that, so all of that has limited dollars advances. We can see the German bond yields, they hit a 3-week high after German government yesterday announced that it will have to issue more 30-year bonds in 2018 than they did in 2017. It led to a sell-off in German bonds, pushing up the yields. And if we move on to the euro now, we can see that the euro has hit a near 1-week high of 1.1853 versus the dollar. We also had some comments by several ECB policymakers in the past couple of days. So there does seem to be signs that the debate within the ECB is moving towards normalization of policy, with the focus turning away from asset purchases to interest rates, following the remarks by the central bank heads of Slovakia and Estonia yesterday, and Germany's Weidmann once again reiterated that the ECB needs to put an end date to its stimulus program. So all of that is boosting the euro. The pound, though, it is fairly steady against the dollar, around just below 1.34, but it did fall to two-week low 0.8865 versus the euro, mainly due to on the back of the rising yields in the eurozone, but also some concerns about the trade negotiations with the EU. Prime Minister Theresa May held her first cabinet meeting yesterday to discuss the Brexit end state, and we are seeing that the UK's official line remains that the UK wants a bespoke trade agreement with the EU, one that is going to be more ambitious than the recently signed Canada-EU deal, although the EU chief negotiator Michel Barnier is insisting that UK cannot have anything more than the Canada agreement. So that is pressuring pound euro at the moment. And let's move on to the Canadian dollar now. We can see it's back. Actually, it hit a fresh 5-month low of 1.2918. So that region around 1.29. 10 had been a strong resistance, so that was a 50% retracement of the downtrend in USD CAD. So USD CAD has now managed to break slightly above that resistance, pushing the Canadian dollar to a 5-month low. So that pressure came for the loonie came after the Senate passed its tax bill, plus some lingering concerns about the NAFTA renegotiations, which lately haven't been going too well. And this weakness in the loonie comes despite the fact that last week the Bank of Canada Governor Stephen Poloz said that we could potentially see a rate hike in early 2018. So this really puts into focus the Canadian inflation and retail sales numbers that we are going to see this Friday. The New Zealand dollar also fell back after the Senate tax vote, hitting a 1-week low of 0.6952 against the greenback. Also, we had a much larger than expected current account deficit out of New Zealand for the third quarter earlier today. And the focus later on will be the third quarter GDP figures. Those are due at 21:45 GMT. And finally, let's have a quick look at the Swedish Krona, because you can see Euro Krona fell sharply a short while ago, hitting a 2-week low of 9.859. This came after the Sweden's central bank, the Riksbank, announced that they will not be extending QE beyond the end of 2017, and they held interest rates at minus 0.5%. They also brought forward the reinvestment of the bonds maturing in 2019 to 2018. This means that the reinvestment in 2018 will be much larger than expected. So that was overall perceived as being fairly dovish. That's why we saw the euro recovering swiftly against the Swedish Krona, currently trading around 9.9160. The Riksbank also slightly revised up its forecast for inflation in 2018, and they expect to start raising rates in the middle of 2018, which was unrevised from their earlier forecasts. And finally, moving on to today's economic calendar, we can see that there's not going to be too much major data. We're going to have existing home sales out of the US later, and those New Zealand GDP numbers much later on. That's it from me. Thank you very much for watching, and have a great day.